Well, welcome everybody to the first in what we plan to be a series of FlightGlobal webinars focusing on the impact of the coronavirus crisis on the global aviation and aerospace industry. A crisis that, since it first began affecting services to and from China in January, has steadily intensified, and in the past 2 weeks has virtually shut down air travel throughout the world. It's a crisis unprecedented in post-war times that virtually nobody saw coming, certainly not when the first cluster of cases was emerging in Wuhan early in the new year and beginning to reach further afield. When many exhibitors pulled out of the Singapore Air Show in early February, they were accused by some of us of being overcautious, even hysterical. And as late as the second week of March, politicians were assuring us that despite the spread of infections onto every continent, life could, by and large, continue as usual, so long as we washed our hands and stayed indoors if we had a persistent cough or fever. How we yearn for those days. The suddenness and the scale of what we are now experiencing in the aviation industry, a situation much worse than the fallout from 9/11, SARS, and the 2008 financial crisis combined, has left our industry with entire fleets grounded, schedules decimated, and airports devoid of passengers. Now, airlines have been on the front line of all this. Faced with national travel bans and domestic lockdown guidelines, virtually every carrier in the world is facing a cash crunch and some a crisis. But the aerospace industry is not far behind. Boeing, already in turmoil because of the MAX situation, is under the shadow of bankruptcy. Airbus, which until a few weeks ago was facing the happy challenge of having to ramp up for record demand, has had open new credit lines just to remain solvent. The effect is being felt all the way down the supply chain. So to discuss what this means for airlines and aerospace, and what sort of industry we might expect to emerge at the end of all this, I'm joined virtually, of course, by two foremost experts in their field. But before I introduce them, a quick explanation of the structure of this webinar. So we're scheduled for just under an hour, the first half or so of which will be taken up by a discussion. And during that time, the floor will be open to questions. You can type them in using the Q&A icon at the bottom of the screen. And if you have any technical problems, please use the chat icon. And between us, we'll try and cover as many questions as possible during the second half of the webinar, during which, of course, you can continue to submit questions. I'm also joined by my colleague, Max Kingsley-Jones, who will be helping me to moderate the questions and backing me up if there are any technical glitches, which I hope there won't be. Max, you've been covering aviation for more than 30 years. Can you recall anything like this?
Muted. Sorry, just realized I was muted on that. It's been a tremendous 30 years. We've seen so many downturns, and it feels like they've all conspired together to be one horrendous nightmare. I was wandering around Changi Airport in mid-February after the Singapore Air Show that you mentioned, and it felt like a ghost town there. And we thought maybe that was going to be the limit of it, maybe Asia Pacific, and perhaps stretching across perhaps to the Middle East. But of course now it's taken out almost like in a series of a domino effect across the world. It's been absolutely unprecedented, and I'm looking forward to hearing the thoughts of our speakers in the next half an hour or so.
Well, thanks for that Max. And now just to introduce these two esteemed panelists. Chris Tarry founded CTAIRA as a specialist aviation and consultancy business in 2002, after spending some 20 years as a top-rated analyst in the City of London. He has served as a special advisor on aviation policies to the UK government, parliamentary committees, and the Civil Aviation Authority. And as well as lecturing at several universities, He's advised a number of airlines and airframers. He may be known to many of you as the author since 1999 of a regular column in Airline Business. Richard Aboulafia is one of the most sought after commentators on commercial and military aerospace by the world's media, and he's a familiar face on television. As Vice President Analysis at the Washington, D.C. based Teal Group, he manages consulting projects for a number of clients. He writes and edits Teal's authoritative World Military and Civil Aircraft Briefing, a forecasting tool covering over 135 aircraft programs and markets. Now, like most of you, I'm sure, we're each of us participating in this webinar, as you can probably see from our home offices via the miracle of the internet and domestic Wi-Fi, inventions that have made it possible for us to work remotely and hold events like this in a way that just wouldn't have been possible a decade ago. So, Chris, if I could start with you. This crisis is hitting everyone, from the best managed carriers with the most secure cash reserves to those that were perhaps skirting dangerously close to the edge already. Which airlines or perhaps which types of airlines do you expect to be in the biggest danger?
Hello, and good afternoon, everybody. It's a pleasure to be a guinea pig, I suppose, in the first of these webinars. You very kindly mentioned I write for Airline Business. In my last column, I posed a question to airline CEOs well before this had become an issue of did they feel lucky, and if they did, why? It was really to highlight how volatile the industry can be, and I hadn't foreseen this, as nobody had foreseen this. And I think if we go to the real point of your question, of course, we analyse many airlines, and we've got our list of who we think are susceptible. We think we have a list of those who we think face an existential threat, but I'm not going to mention names in what is a public forum for all sorts of various reasons. But one thing is very clear, that the only thing that matters for any business in the airline industry, or airlines in particular, is cash. And as soon as the ability to generate cash becomes compromised, as it has been, and you mentioned how traffic has fallen off, Max did, when he was in Singapore, and we've seen weekly from the CAP stats and other providers of statistics how capacity falls, that there is really no traffic. We're still seeing flights because cargo is being flown on passenger airplanes because there are not enough cargo aircraft. And what we're also seeing, I think, is summed up very well in the words of Rick Augustusson when he said there is no traffic, and SAS were the first to cut back in a big way. But if we look at it, there's a sort of spectrum for airlines and where they stand on the, yeah, it's going to be difficult, but we will manage through, to those where it is more than just difficult. Unless we have support, unless we have help, we are going to fail. And those, very simply put, that have cash, that are not extensively geared, so the gearing is very much under control, and have assets which they can realise or liquidity they can draw down, they're in the OK box. And you can move through a spectrum where you get those who've got some cash, but their debt is high, and they've got a few assets that they could realise. But again, if we look at assets, we're looking at distressed values for assets now, moving into that area. So there's going to be a shortfall of what they hope they might realise, if they can realise that, to those who have very little cash, have a lot of debt, and have no assets, and their life can be very difficult. But again, generalisations are hugely dangerous. We then come into those which are government-owned carriers, which are fundamentally important to the nations which they serve, and if they fail, nobody's going to provide that connectivity. And against that background, it's important to take a view, and governments will take a view, on the economic value that that carrier provides, and the loss of that value as we move into, inevitably, the recovery phase. I think if we look at the data on schedules, if we look at the capacity, you know, it comes out every week, it changes every week, and will continue to do so for some time. But I think there are three questions. One is, in terms of momentum, is it going to get worse than it is now? Secondly, how long will it stay like this? And I suppose these are related questions. I fear that we haven't seen the bottom yet, despite people suggesting we may see the bottom in a few weeks' time. And then the issue is how and when and what the shape of the recovery will be. Now, I'm on record of saying I think we're going to see an industry in a different size and shape. That is inevitable. We're looking at where cash can come in from commercial sources or from government sources. And I know we'll talk about that, I'm sure, later. But I think what we see, and it's something I've referred to many times in my columns, about the role of the economy. And we have people now talking about a slump. Now, it may not be a slump, but we're in for a period of prolonged economic uncertainty. and that has an impact on our own behaviours. It has an impact on corporate travel, because the first thing that goes in a downturn is corporate travel, and that won't come back anytime soon. And again, we're all doing this remotely. This is going to become a behavioural change if we're self-isolating for a few more weeks, and corporates will see that as a way to avoid travel expenditure. So it's going to be very patchy. And given the hit on corporate profits, well, that's not going to recover until 21, 22. So there's a lag there and a different size and shape. For leisure, it could well be, notwithstanding the optimism of President Trump, that the United States will be open by Easter. I fear that we may miss a large part of the Northern Hemisphere summer traffic and the cash that goes with it. And it's not only about cash now. We can look at the cash outflows of these airlines having reached an almost irreducible minimum of cash outflow to one where they need cash to get them through next winter. So I think the whole issue is it's not just, and as you said in your introduction, the airlines, it's everywhere else. And I've often said the airlines are quite often seen as that necessary element in the system for everybody else to make money. And if they're not making money, it becomes very difficult for others.
Which brings us neatly on to the aerospace side of the equation, if you like. Just before I come on to that, just a quick housekeeping reminder. Keep your questions coming as Richard and Chris are speaking. Just a reminder to please use the Q&A icon rather than the chat icon for the questions, just so we've got all the questions appearing in the same spot. But Richard, Boeing's MAX problems aside, until quite recently, this was seen as an airline problem with backlogs and long-term demand prospects sufficiently strong to see the airframers and their supply chains through what might have been any sort of immediate short-term problems around temporary groundings and schedule changes. But in the past week or two, this has taken on a much darker aspect for manufacturers. Now, none of us know how long this is going to last, but how equipped is the aerospace industry, the manufacturing industry, to ride this out through the summer?
Yeah. Well, first of all, Murdo, thanks very much for having me on, and hello to everybody from across the pond. Things here, I expect, feel a bit like they do over there. We're all waiting and watching. Probably the epidemiologists in charge and the Dr. Anthony Fauci's are as important, if not more important, than the politicians. But getting to your question, it's, as you know, the aerospace industry is heavily dependent upon variable costs. That is to say, something like 85% of the cost structure of a manufacturer is variable, which means you could turn off the factories, stop buying from subcontractors, fire a great deal of the workforce, and of course have all of those subcontractors, which are typically 70% of the value chain of an Airbus or a Boeing jet, also do exactly the same thing: shutter their factories, lay off their workers, and Airbus and Boeing would be fine for a year, maybe 2 years. There's not a problem with liquidity at that level. However, you'd have absolute carnage through the rest of the supply chain. And of course, the additional damage done to national economies and the global economy would be huge. The layoffs, the blow to GDP, everyone wants to avoid that outcome. So here we have the situation. I listen to Chris and I think, okay, exactly as I suspected, this is a market that no longer functions, right? People aren't flying. The last thing an airline wants is a jet. So from a manufacturing standpoint, how do we survive in a non-functioning market? And obviously there are two ways to do that. One is to hunker down, preserve cash, pick up the pieces on the other side when that market, the airline market and the flying market, becomes functioning again. And the other is just brutally to go hat in hand to governments and say, hey, will you let us build jets as a bridge to keep people employed, to keep factories open until that demand recovers? And this is the hot topic of the week in Washington. Matter of fact, just yesterday, late last night, the Senate passed a $17 billion component of a $2 trillion bill and included aid. We don't know the exact amount. We don't know the terms and conditions for Boeing so they can keep building jets. I think a lot of people refer to this as a bailout. In some ways, it is a bailout for building aircraft, but the company itself wasn't in danger of going bankrupt. Rather, they simply would have needed to turn off everything with all the blow that goes with it. So I guess that's my complicated answer. We can survive this. We just have to shut off everything, or we have to get money from the government. And what's scary is so much of the economy is in exactly this position. You know, none of us are going to rush out and buy a car this week. None of us are going to stay in a hotel or eat a restaurant meal this week. All of these markets are non-functioning markets right now. So it's either government cash or mass economic carnage.
Well, thank you for that, Richard. Yes, absolutely. You touched on the whole question of state subsidies there, and that's one I wanted to address now in a bit more detail. So moving on to Chris, initially, are subsidies the answer? Do they have to be? Is a blank check for airlines and indeed aerospace manufacturers fiscally feasible? And that aside, does it force politicians and civil servants to pick winners, giving the same help to, say, a Lufthansa as an Alitalia, or to an Airbus and a Piaggio? So, Chris, let's focus on the airline side and what you think the answer is and what might happen in terms of state support.
Surely, Murdo, and I think we've begun to see it happen. And Richard mentioned the bill that was passed last night in the US, and within that there was $25 billion of grants made available to US airlines. So grant aid is, some would argue, is a distortion because you don't have to pay it back. Then there was another 25 billion of loans with conditions attached, but they weren't particularly onerous conditions, because it seemed that the only period of time where they weren't allowed to issue dividends or have share buybacks was for 12 months after the end of the loan. But it has focused minds, and we've seen some pretty public statements from airlines saying, well, we don't need help. And we've seen others say, well, we really do need help and we need that help now. And we've seen in Europe, Norwegian already receive some money from the Norwegian government, complying with a number of requirements. The issue is, you're absolutely right. Governments have to decide how much is required. It's a question of perhaps backing winners, as you say. It's no point in sustaining an unsustainable business in the competitive environment if you're certain that competition is going to provide or fill the gap when a carrier fails. That's not always the case. And to go back to the example of small countries where they are entirely dependent on a single airline to provide carrier capacity and connectivity all the year round. Even in Europe, where we have small countries where lots of travel in the summer because people are inbound going to spend money at leisure destinations. But they have to, the home carrier has to provide service all the remaining 9 or 8 or 9 months of the year. So there are issues there. So that's pretty clear cut. If nobody's going to come and do it, I will have to provide it. But where you've got a competitive environment, it's slightly different. It's also different where you have airline groups. And if I am the government investing in an airline group, I surely want to make sure that my investment, in whatever way it is, whether it's debt, equity, or whatever, goes to the benefit of ultimately the citizens of my country, who are ultimately the taxpayers. It's on my tab. So we've seen over the last few days sort of suggestions that groups might have to be broken up if one government within of one of the airlines within the group decides to invest. It's been clear in Europe that it would appear that the Dutch government is minded to invest in KLM if it is required so to do. The same with Air France. But you mentioned Alitalia. Perhaps this has given the Italian government the necessary cover, given the suspension of the state aid rules, to actually private or renationalise Alitalia. But you're right, it has to be. There's a huge moral hazard associated with all this, and governments are acutely aware of that. The other thing is you've got to be sure that it is money that there is going to be a return from, or you're going to get paid back. So we can look at time-limited guarantees. We can look at central government, central banks buying bonds issued by companies, or we can look in the ultimate case of governments taking an equity stake. But as we've seen with the loans in the US, and we've seen anything attached to equity, there will be conditions. And those conditions may not be acceptable to managements who, where it is a private business, they have grown, well, they have always been used to determining what they ought to do and what they should do. The issue about investment also is not just where you've got pan-regional groups. it's also for pan-regional airlines. And again, if you're an airline where you have the majority of the traffic is outbound leisure traffic, from an analytical point of view, you are exporting, you've got direct jobs associated with the airline, but you are exporting economic benefit. Now, there's a huge societal benefit, and governments have to weigh up societal and economic benefit. It's not a bottomless pit, and it's got to be where, yeah, okay, and as we've seen in the UK, the government has said, well, you go and try all the commercial avenues, and if those commercial avenues don't provide the money that you need, well, we'll consider it. But that's almost like a perverse logic. So if you've tried everything and the government becomes lender of the last resort, what terms does the government provide that capital or that cash on? So I'm sure a lot of thinking still to be done. But yes, airlines are fundamentally important to economies, connectivity, and almost anything that you like. There's societal benefit, there's economic benefit, and somebody has to judge. And just one more thing, we've seen of late coming in, and I did touch upon the environment in the last article in Airline Business, is that the environmentalists have said, okay, well, look how good the quality of the air is. It's not road traffic, there's not air traffic. Just how much air traffic do you need? And I'm sure we'll come onto the size and shape of the industry and how it might develop and how airlines will restart their networks later. But I believe that is a hanging question for now.
Indeed, and we will, I'm sure, come on to that in a minute or two. Richard, on the manufacturing side, presumably Boeing is too big to fail. The US government won't let it. But where does the state aid stop? Do you go right the way down the supply chain to the mom and pop businesses, to the SMEs, the guys employing 5 people in a shed? Where does state support for the industry start and stop?
Yeah, this is such a big question because we don't know the details of the mechanism behind the aid that's been proposed. A couple of big issues. One is there a specific carve out for the supply chain? Or is Boeing going to be in charge of just spending it out and letting it flow down? And to what extent is the government going to take charge of, well, allocating the cash? And it gets fiendishly complicated. You know, I mean, as I'm sure you know, there's a unit or two of Airbus that's in charge of supplying Boeing. Did they get state aid trickle down, you know, Stelia Aerospace, someone like that? Or, you know, French, British, Japanese companies, obviously they have to benefit to some extent. You know, 70%, as I mentioned, of the value chain is going to suppliers. Does the market just work its magic? We don't know this. I would hope that there is some supervision. Now, the good news is that all suppliers, to a certain extent, obviously the higher percent, the better, have exposure to the defense market. And the Department of Defense has indicated that it is extremely mindful of the liquidity crunch that a lot of its supply chain finds itself faced with. You know, I mean, use an extreme example, Spirit Aerosystems. They make some important chunks and pieces of key programs, but they're, you know, 50% max and another 25, 30% other commercial programs. They're uniquely vulnerable. So DoD has been talking in terms of accelerating payments in order to facilitate the, I guess, the unfreezing of credit markets, because that's a big issue, particularly at the 3rd and 4th tier of the supply chain. So there's so much at stake because, of course, you know, it is all about the supply chain. It's where the majority of jobs and innovation takes place. And it's just that it's very complicated for governments and even manufacturers to deal with the globalized and interdependent nature of that supply chain.
Right, thank you, Richard. And the final question from me to both of you. None of us knows where this is heading, not even the medical and the scientific experts, certainly not the politicians, and none of us are any of these. But let's maybe assume a reasonably best case scenario. So we've got this shutdown, this virtual economic shutdown that manages to reduce or hold the infection rate to one that's at least within the capacity of the health services of perhaps developed countries at least. And we do see a gradual unlocking of the lockdown, maybe in June, maybe in July, allowing airlines to resume some operations. Now, that in itself is, of course, by no means certain, but assuming that sort of scenario, that sort of best case scenario, what sort of industry emerges from the other end? Chris, what's your vision of how different it might look?
Murdo, I think it's going to be smaller, and I think there are a number of reasons for that. I think if we take your assumption that we maybe begin to unlock in July and people begin to come back, yeah, we're into the Northern Hemisphere summer and then maybe some revenue. What we've also got to look at is, I think visiting friends and relatives traffic will come back pretty quickly. That's the pent-up demand, and when there is no concern, not just that rates are controlled, but there's not a second wave. We've heard people talk about a second wave of the coronavirus. And also, whenever there's an event or an incident, it heightens our awareness that there may be another one. So our behaviours sort of change around that too, or an expectation around that changes. But if we look into July, and let's say, okay, you can begin to travel. So where if I'm a leisure passenger, am I going to travel? Because we've seen the decimation of the hospitality industry. So are there places to visit, places to stay? So we've got to look at it as a system on that, and we're receiving travellers. From a business point of view, again, business travel, as I mentioned before, I think is going to be held back significantly. From an airline point of view, yes, the irreducible minimum of cutting back all unnecessary expenditure, cutting back capital expenditure, cutting back everything, but maintaining a capability to restart, that's not going to be instant. So that's going to increase. It's going to increase, first of all, on the routes where you make money. One of the problems that the industry has had for a long time, and Richard may disagree with this, but I've seen it very much as a supply side driven industry. And you get airlines that pursue a strategy which I call have metal will fly. And it only tends to end up one way, which is great for me as a consumer and great for me as a passenger. I think we will see airlines be more circumspect about all the routes and the capacity going back in. We're going to see unplanned returns to lessors. On the other hand, in addition to deferrals and cancellations of aircraft, because the airlines haven't got the cash. You look against that background, you've got dislocation in that market as well. So smaller, more focused, key routes first of all, perhaps underutilization of airports, reduction in EU 261 claims, better punctuality, and a recognition that yeah, the system was overstretched and it can function in this way. So we can move all the pieces around the chessboard. As you said, the only thing we know about forecasts anyway are wrong. They are more likely to be even more wrong, which is not particularly good use of the English language now, because we still haven't got sufficient firm data. Yes, we can take a view that from the first case in Wuhan to when they're going to finally release the restrictions, it's going to be about 5 months or so. So we can overlay that, but the shapes of the curves are different in each country.
Richard, let's assume that best case scenario. Let's assume Boeing survives. Let's assume the MAX gets back in the air around about the time that the lockdown begins to relax. What sort of industry comes out of that? I mean, we can't be at the backlogs that we've had. The demand that we've had has got to be, as Chris was talking about, it's going to be a lot less. How will that reflect on the aerospace industry?
Yeah, first of all, I don't disagree with Chris. I might wish this iced coffee was a large whiskey as a result of his comments. Sadly, it's just iced coffee. But yeah, it's a supply-driven industry. What does it mean? Well, you're adding government cash both to the airline and aviation manufacturing sector. The aviation part of it, the manufacturing part of it, can become a synthetic market. No one's taking these planes, or no one really wants them, but they're being built because there's government money. The airlines, by contrast, the cash that's going into them is there to keep them in being, as Chris said, waiting for that comeback, waiting for that great day that you've got monster hen parties coming out of Gatwick again or whatever else, but they're not paying people to fly, right? I mean, it's not a synthetic market. It's merely an effort at preservation. But back to aviation, it's a synthetic market, which means we're building jets. Forecasts for this year, assuming the government aid packages come through, aren't going to be a whole lot less than they were before. Easy part of my job, just keep it going. And you'll simply see a lot more whitetails. There was the suggestion that Airbus get government aid in the form of government-funded aircraft that are then presumably leased out by the government. So what are you doing here with the synthetic market? Well, you're taking demand away from 2021 and 2022. You're creating a heck of a demand trough because you've already got the supply built up in advance So I'm really concerned that what we're looking at is something that the second or perhaps first half of 2021 becomes, I mean, as you know, this industry is 7 good years, 3 bad years. The 3 bad years are typically a 35% downturn in terms of value of deliveries. You'll probably see it be worse than that by 2022 because you've just removed several years of true demand and kept the synthetic market going through that period. So I'm a little concerned about the years to come. Now, unlike the airline business, we do not have systemic overcapacity in numbers of players. We have 2 airframers, we'll see what happens with the Embraer acquisition, assuming it goes ahead, 2 players. That can't change. The supply chain too, I mean, both segments of it have 2 maybe unusual ones like turbine engines, have a third, but many are 2 or 3, call it that. That's not going to change a whole heck of a lot. I suspect, though, getting to this on bigness for the sake of. But as we saw last year, it begins to get, you can't actually combine when there are only 2 players in a given segment. Say you merge Woodward and Hexcel. Those are 2 names taken out of a hat. What's their connection? None. You're just making it bigger. And I understand the logic of bigger. You'll simply see more of that logic of bigger.
And a very, very quick supplementary question to Richard. I mean, there's the defense industry as well, of course, which Boeing and others are big players in. How can the defense industry, without getting too deep into this, because it's away from the core discussion, but can the defense industry absorb some of this problem for the commercial manufacturers?
Yeah, I mean, to a certain extent, particularly in the U.S., the procurement budget, U.S. defense budget was about $99 billion about 8 years ago, and it's ramped up to about 175. So in terms of employment, in terms of subcontractor revenue, yeah, the answer is yeah, some of it can be absorbed. But you look at the total economic footprint of the commercial business, there's nothing like that. If you're spending a couple of years, 35% or more off of that, yeah, I'm afraid we just can't compensate on the defense side all that much.
Yeah. Thank you for that. A question. We're going to open up to the audience questions now, and I've got one for Chris. Are legacy carriers more vulnerable to this situation than low-cost carriers, or vice versa? What's your feeling?
The honest answer, it depends. And just because you call yourself a low-cost carrier doesn't mean you're actually low cost. And the reality is, with any airline, it's the gap between what you can offer a seat for and what you can get for that seat. And low-cost carriers are profit maximizers and cash maximizers, just as any legacy carrier. What I think we will see, and we've seen it in the past, is that an event such as this, and this is, as we've all said, is an unprecedented event, but they act as a catalyst for management change. It's almost a so-called burning platform. And there are a number of airlines who, and strategic or presentations of strategy I have watched and sat through where, yeah, it's fine. And we had one not so long ago where one of the members of the management team, after the CEO of the group had said, this is what we're going to do, said, strategy without implementation is hallucination. And sometimes you need a catalyst. So remember that BA's Future Size and Shape program was after 9/11. And it depends on the management focus and their ability to do it. If we look at legacy carriers, and again, people who know me know I hate putting airlines in boxes, but we sort of have to do it. There's no escape. It depends. It depends if you can make the change, if you can protect your market, which sounds terribly anti-competitive, but you can do that by product, you can do it by price. But yes, you're going to need ever lower costs. It may be a case, an opportunity here, not just to reshape the size of the business in terms of the number of airplanes that you fly. There's been an awful lot of talk about the use of technology, but there's been blocks to its implementation. So that's obviously clearly not good for those who are employed in the airlines, not just now, but maybe in the future. But it needs to be a slimmer, more efficient industry in parts. But again, just putting airlines into boxes, saying my low-cost airline. Some low-cost airlines are not particularly profitable. Some low-cost airlines within groups of airlines don't really fulfill the role that they should. So I think managements at the moment perhaps haven't got time to think about strategy. It's about survival. It's about getting through the next few weeks and months. But there is clearly a need for a different size shape, an industry that's going to be more efficient. And at the end of the day, it's interesting where when I first started watching and looking at airlines, airlines didn't pay dividends. They were volatile. The shareholder return came through the share price performance. One of the great issues and one of the constraints that the US government is seeking to put on airlines is to stop special dividends, share buybacks. We've seen that in Europe too. Most airline CFOs I've asked when asking about how much cash they want, the answer is usually more. So we'll have a different focus on that. And yes, when we see a turning point, airlines do outperform the stock market when it recovers and returns. You may have seen something like a false bounce in the last few days. Yeah, different environment, different approach, but at the moment the focus on survival and making sure you either keep cash within the business as much as you can or minimize the outflow, and there's obviously a constant outflow, but you're searching for ways of raising new cash.
Thanks for that. Another question, and you mentioned, Chris, you mentioned 9/11 there. What can we learn from previous aviation shocks? And 9/11 is probably the biggest one in our careers. There have been plenty others, of course, and how the industry recovered afterwards. Are there any parallels to be drawn with say 9/11 and some of the other ones? And we saw there both on the airline side and on the manufacturing side a lot of structural change that happened after 9/11. We saw the rise of low-cost airlines. The US airlines took a long time to really sort of remodel themselves, perhaps more than a decade. On the aerospace side, we saw a lot of consolidation. Let's start with you, Richard. What can we learn from what happened after 9/11, if anything?
Yeah, boy, it's kind of important, I think, to look at this from a Boeing-centric perspective, because at the end of the day, Airbus, strangely enough, wasn't all that affected by 9/11. Airbus was on an upward production ramp. They stayed on an upward production ramp, and Boeing took the entirety of the production-related blow from 9/11. They fell by 50%. And, one thing that led them on a path of, rightly or wrongly, was outsourcing, even more so than they had. The 787 virtual business model, if you will, of distributed R&D, that partly had its origins then selling off Spirit Aerosystems, and of course the factories in St. Louis that became part of GKN, and several other outsourcing initiatives. Now, the funny thing is that since the recovery from 9/11, there hasn't been a downturn in the commercial jetliner manufacturing business. We've been on a straight ride up since 2004. And for a great many of the managers, especially at Boeing, they don't necessarily have the depth of experience to remember what it's like to manage through a downturn. So they embarked upon a strategy, predictably enough, of vertical integration, where you create all these wonderful cost centers. Why not? Why not do our own avionics, actuators, auxiliary power units? Let's do it all in-house. Fasteners, let's do more and more in-house. And of course, that means when you take a 40% revenue haircut, your overhead is god-awful and your margins go to hell. So I would look to see a reversal of that at Boeing very fast, like along the lines of, oh, right, that's why we were outsourcing and not vertically integrating. It begins to make sense to us now that we remember the sheer terror of being in a downturn. So I think that's one thing we can learn from that experience.
And Chris, you wrote a lot about 9/11 and the aftermath. I remember at the time it looked incredibly grim for months afterwards for the airline industry, and as people again just stopped flying. The industry recovered at different speeds in different parts of the world. But what parallels can we draw on the airline side from the aftermath of 9/11?
Murdo, you're right. And in context, September the 11th, 2001, I've just finished chairing a conference in Bangkok, and we concluded that life was pretty difficult. 5 hours later, the world changed. And as an analyst, I was given a few days to sort of pull my thoughts together. And I wrote a note called Fundamentally and Irrevocably Change, which I got somewhere in my archives. I'm now writing Fundamentally and Irrevocably Change Part 2. And it's looking at all these issues and bringing to bear what we saw then and what we saw in the great financial crisis, because we saw a great dislocation on the demand side there. And again, as I mentioned just before, we saw particularly BA put its future size and shape plan into place. Look, there are a number of airlines, not just in Europe, but around the world, that need to be leaner. But it's impossible to manage until you adopt, or what it used to be in more normal times, I call precipice management. You march everybody to the edge, you look over the edge and say, well, you've got to change because there's no way forward. And this is an event which will focus minds. I think the other thing, and you mentioned before, we touched on low-cost airlines, and what we saw, and part of it was because of the regulatory environment in Europe, enabled the growth in low-cost airlines or new entrants and pan-regional businesses. We saw an acceleration in the growth immediately after 9/11. We saw Ryanair and EasyJet buy aircraft at particularly attractive prices because there were no other buyers in the market. And they pressed the accelerator and they grew the market because full service carriers, whatever we want to call them, were looking inward. They were worrying about their future. They were having to make change. A number of elements in the business. Management has to manage the business, otherwise the cash becomes compromised and life becomes difficult. It needs almost like a hit squad, a hit team to implement strategic change and implement operational change. We also saw the low-cost carriers accelerate again after 2008, 2009. Why? Again, because the big hit had been taken by the full-service carriers. Again, if we look at other markets where this could occur, in Asia, we still haven't got ASEAN integration. We can see the growth in the markets there. We can see the economic drivers that will come back. The world economy will come back. But even before we had the coronavirus, growth was beginning to slow. It slowed and we had a step change. And we can talk about, what shape we see the recovery. I know Richard, in something he published, I believe this week, was talking about a deep U. It can be a deep U, it can be a recumbent L. We really don't know. But against that background, the near term is going to be less in terms of volume. It's going to be less in terms of value. And Tony Tyler used to say that the airline industry is quite straightforward. You've got to make sure revenue's ahead of cost. So you've got to make sure you make those changes which are structural against what I think is not just a transient or temporary effect from coronavirus, but actually we're going to see a structural change in the way in which we travel, particularly in terms of business, over the foreseeable future.
Thanks, Chris. We've got about 10 minutes left, so we're going to try and rip through as many additional questions as we can. One for Richard, specifically on Boeing and the MAX. Now, let's assume the MAX gets back in the air between now and summer. Do you expect there to be a large wave of MAX cancellations because inevitably fewer aircraft will be needed?
Yeah, typically when you have a downturn like this, you get an awful lot of deferrals and renegotiations, but cancellations are typically a function of airline bankruptcy. So I'll leave that to Chris to say whether those are coming down the pike or not. But there's every reason in the world to defer. The MAX is in its own uniquely, I suppose, hellish place. Pretty much all of the aircraft that were ordered are now subject to the Material Adjustment Clause, MAC, which means airlines have virtually unlimited power to renegotiate and defer with no penalty whatsoever. So what do you got? You got 387 jets that were built and delivered, another 350 that were built but not delivered, pickled, if you will, that need to be pickled. And of course, they'll be starting up production to the tune of 20 per month, probably around May. This is capacity the industry does not need right now. So it's going to be difficult placing these already built jets. And then you're going to see as many deferrals as, well, mandated by the traffic outlook.
And Richard, thank you for that. Another one for you, and this has come from someone who's a structural engineer working for an aircraft seat manufacturer in Paris. Maybe not giving too much away there. It's his or her question. Nobody knows where this is going to end, of course, but do you expect there to be a frenzied ramp up in production activity across the supply chains when it does end, or will it be something more gradual?
Yeah, interesting question, and it gets back to, well, what Chris mentions, a deep U or a recumbent Dell, and that, of course, in turn becomes an epidemiologist's question. In my ideal world, what we would see is after the horror is over, and since we're not doing the herd immunity thing, we're obviously going to see recurring outbreaks and periodic travel bans. We could be in for a difficult year and a half. But at the end of that, there's a vaccine. At least that's what our best scientists tell us, to quote Trump, I suppose, our best scientists. If that's the case, I think you're going to see a huge wave of nostalgia. I'm having dreams of being in airports and flying through the air again, as I was up until a couple of weeks ago. And I would love to see a very steep recovery when they come up with that vaccine. Now, the problem is that from a manufacturing standpoint, we're probably going to have, as I mentioned, something of a synthetic market that ties us through that. So the demand uptick from a manufacturing side might not be nearly as profound as the demand uptick from a traffic standpoint.
Okay, thank you. Now, Chris, I'm asking you for a reasonably short answer to what is a very technical, detailed question, but let's give it a go. So someone has asked with Lufthansa in mind, and they've talked about, they've signaled they would favor taking on corporate debt rather than sort of jump into the deep end of leasing aircraft. To what extent do you expect SLBs being used by some of the larger airlines who own a larger portion of their aircraft to raise cash and ease liquidity issues?
Well, we've seen, as I mentioned in my sort of introduction, that airlines are looking at what assets they have and what they can use as collateral, or which assets that they can sell. And aircraft are certainly one which you can either use as collateral and finance up on them if they're unencumbered, or you can do sale and leasebacks. The other issue of collateralization is slots, and slots at congested airports. Although there's a very interesting debate if airports are not going to be full, what is the value of slots and how long is it, what might we see in terms of different slot regulation. But that's maybe another seminar for that, Murdo. But in terms of raising corporate debt, yes, they want to keep control over what they can do. They want to tap the commercial market. The issue is the capacity and the appetite on the leasing side, where I would think a number of lessors are a little nervous and a little concerned about unplanned turnbacks on the one hand, which they've got to put back into the market at a much lower market clearing price, which provides an opportunity for others to come into the market. But in terms of it, in theory, absolutely. We see some airlines in different parts of the world make all their money from sale and leasebacks on, and they lose money on moving passengers. So it is an accepted way of raising money. It depends on the appetite. We saw a very hot market for people coming into the leasing market who may be seen more as investors. It may be that they run for the hills. Very difficult to go to your credit committee and say, well, this is the state of the airline industry now, and this is how it's changed since we last told you 6 months ago. It's very volatile, never been different, but certainly a way forward.
And another one on cargo, on air cargo. We've seen a lot of airlines pretty much ground their passenger fleets, but of course keep air cargo going because economies, and we need food and we need stuff to be transferred from A to B. This questioner is suggesting that airlines have perhaps been slow to grab this opportunity by converting passenger aircraft to freighters and perhaps operating more freighter operations to generate much needed cash. Is this something?
I think that's a very long-term thing. I think what we see at the moment, and somebody mentioned to me today that cargo lease rentals have gone up by 600% because there's a shortage of dedicated cargo aircraft, because it's being suddenly focused into attention that you've seen schedules. We've got SAS down 90% on its international routes now. Not all of those have belly hold cargo, but a lot of cargo goes in the belly hold. And what we're seeing a surprise, given the fall in passenger numbers, given the fall in just that countries are blocked and you can't travel. We're still seeing a greater number of flights out of airports, which are passenger aircraft being used for their belly hold capacity to move medicines, cargo, whatever else it may be, because the world will seize up. We won't have the food that we need unless we have these cargo flows. What's certainly been the case for some time, and Richard will have been to more manufacturer presentations than I have, It's how you can migrate the older aeroplanes into cargo, and whether it's Airbus airplanes or Boeing airplanes, and how you use narrow bodies for this. And yes, this may act as an event to say we haven't got a large enough cargo fleet. And again, if we do see a collapse in residual values and values that second-hand aircraft can be traded at, that clearly makes conversions much more attractive.
Richard, let's ask you that one very, very quickly as well. I mean, is there likely to be any kind of impact on the manufacturing side with more demand for passenger to freighter conversions on the MRO side, or indeed purpose-built freighters? That's a market that's been pretty slow over the last few years.
It is, yeah, and I agree with Chris. It's sort of a long-term issue that, you know, what's going on right now, excuse me, of course, is that you've got the absence of so many commercial flights that used to have belly cargo capacity for quite a lot. And those flights just aren't taking place. So it has to be switched to dedicated cargo jets, and there simply aren't enough of those. But when the passenger flights resume, hopefully in a few months, certainly China is giving us some hope in terms of rounding the curve, then you'll see a return to belly cargo capacity. And that would, of course, obviate the need for a massive uptick in demand for cargo jet conversions. So I'm afraid if there is any kind of upturn, it's probably not going to be sustainable in the long run, because so much additional capacity will come back online when passenger traffic resumes.
Okay. We've literally got 2 or 3 minutes left, so before we wind up. So I'm just going to ask one final question to both of you. We've talked about the airlines, we've talked about the manufacturers, but what about the lessors? What sort of impact is this going to have on the leasing sector, who own an awful lot of the aircraft that are out there? They're probably being asked to be nice to the airlines that are leasing the aircraft, but they're ultimately in a position where they have assets that they need to that need to be paid for. What are your views on that?
You know, if I may just start us off, a couple things occur to me. One is, if there is any kind of mandate for airlines to use their aid to pay suppliers, I would think lessors would be the immediate recipient of that. So, and I look for Chris to keep me on the straight and narrow here, but you've got, I think lessors nobody's protected in this ecosystem, right? It's a horrible storm. In relative terms, I think they're better off than others, as long as they can grant rent holidays strategically and appropriately, and they've got the balance sheet to support those rent holidays. Then I would think they would be among the first paid by these aid packages that are being provided in the US and presumably many other places. And then on top of that, you know, very few people were able to leverage the amazing new low interest rates. You know, we've gone from 1.5% federal fund effective in the US to, it's linked to the cost of dirt, please show up and take some cash. That doesn't mean a whole heck of a lot to most people. This is a demand side issue rather than a finance side. But from the lessor standpoint, hey, that might make a difference. It's all about the cost of capital for them. So I think they're relatively protected.
Okay, Chris, we've got 1 minute. Have you got a view on that?
Well, again, it sort of depends on which side of the trade you're on. And for some, it's going to be painful. We've seen impairments for quite some time now. We've seen realization of values through transactions which perhaps have fallen short of what's in the book. But Richard's right. You know, for some, it can be seen as an opportunity, but for others, we've got a real turn-back risk to get it into the market at low lease rentals. Which aircraft are going to come back in volume? Still looking at that. Which airlines are at risk of handing them back? Well, I'm sure the lessors are very focused on that and trying to ameliorate their risk. Never different, and it's not just the lessors, it's all through the system, from everybody who cleans airplanes to airports to whatever. We're just looking at it as, and we started by saying it's a system, it certainly is, and nobody's immune at the moment.
Well, thank you very much. We're just about out of time. I'm really sorry, we've got lots of questions.
Murdo, we had over 120 questions, so we got
120 questions. I think
yes.
we might have answered half a dozen. So thank you. I hope if we didn't answer your question directly, I hope we at least covered some of the things that that you wanted answered. I certainly hope it's been informative. I've learned a lot. It's a very, very difficult time for all of us in the industry, including, of course, in the media. And by doing things like webinars, we're just trying to keep everyone connected as much as possible during these difficult times. I hope we've come out of that with at least a smidgen of optimism and some kind of light at the end of what is likely to be a long and very dark tunnel. It's certainly the darkest days our industry has seen for many, many decades. I'd like to thank both our experts for giving so generously of their time today from both sides of the Atlantic. And thanks to all of you for tuning in. Please check flightglobal.com/webinars for details on our forthcoming exciting webinar program. The next one up is a discussion hosted by Max and featuring two former airline chiefs who have survived previous crises. They've lived to tell the tale. Christoph Muller and Tony Tyler. And they'll be sharing with us their experience. So thank you again. And from Max and me, Chris and Richard, stay healthy and stay safe.
Thank you very much.